What a week of earnings this last week, guys. We saw some pretty crazy moves after some of the biggest companies in the world reported their earnings. We had some sectors green, some sectors red, some sectors split, and it was really an interesting week to watch as an investor. Now, that being said, general trends in the market still tend to be positive. We're seeing more green than red, especially compared to where we were sitting just a few weeks ago. Not every stock responded positively to their earnings. In some cases, I think we had pretty outsized overreactions. And I think this created some interesting opportunities in the market as we move further into the month of May. I'm a younger investor. I'm not concerned about 3-month, 6-month, 12-month performance. I'm looking for companies that I can hold for 10 to 20 years and I can sleep well at night knowing they're in my portfolio. I want businesses that have massive market power and they can outpace the returns of the S&P 500. Today, I'm breaking down 3 stocks for you that I believe meet this criteria that I am watching this week. 2 of these stocks I already own in my portfolio and I will be adding more of this week. And one of these is a stock that's not currently in my portfolio, but is one that I'm watching closely and will likely be adding in the near future. Today we're talking about MercadoLibre, Uber, and e.l.f. First up, MercadoLibre. If you follow the headlines at all, you probably saw something about this. MercadoLibre took about a 12-13% loss after reporting earnings. What caused the sell-off? Does it worry me at all? And does it make me concerned about having a MercadoLibre position? If you don't know what MercadoLibre or MELI does, the closest comparison thrown around all the time is the Amazon of Latin America. They sell a lot of goods. They're a massive digital marketplace. MELI also has a digital financial transaction platform and consumer credit offering, which I am very bullish about, and it makes up a significant portion of their business. And MELI has been investing a lot into their business, especially recently. They've been spending a ton of money building out their free shipping infrastructure in Brazil. And they've also been spending a lot to build out their e-commerce, their fintech, their consumer credit offerings. Building these parts of their business has the opportunity to really create this kind of flywheel effect, where as the consumer credit offerings grow, a lot of that consumer credit will then be used on the MercadoLibre platform. And if the MercadoLibre platform is able to offer more free shipping, more people will want to use the platform, so they'll apply for credit. And it's really just kind of this flywheel of growth by MercadoLibre owning both of those segments. Now, this build out has certainly been expensive. You see the company's net income declined 16% year over year in the first quarter. That's not something you want to see with the company, declining net income. But in this case, I think it's warranted. In fact, I think this kind of spend on these specific types of projects and these specific investments makes me more excited about the prospect of owning MercadoLibre into the future. In their letter to investors, MercadoLibre highlighted this very point, saying that they chose to prioritize long-term growth investments over short-term profitability. That is exactly what I want to see from a company that I am investing in. I love when a company is willing to do this, willing to take on short-term losses, to have their share price go down 10-12% after an earnings report, because they are committed to growing their business long-term and making their business profitable in the long term. As a long-term investor, this is exactly what I want to see from the company I invest in. And I think this is especially true when the numbers back it up. You'll look here, net revenue grew 49% year over year. I'll say that again. Net revenue grew 49%. And this isn't a small startup company. This is a company that's been around for over 25 years. We're talking $8.8 billion. This is massive growth at scale. And this growth is backed up by both segments of the business. As you see here, items sold on the MercadoLibre marketplace up nearly 50% as well. And then if their credit portfolio offerings on that financial consumer credit offerings, that is up nearly 90%. So both segments of the business are expanding, and those segments are expanding rapidly. MercadoLibre is invested into the business. These investments are being converted into revenue, and I believe MercadoLibre is well positioned for success moving into the future. Next up, we got Uber. Now, Uber is probably my top conviction play. If you were to just catch me, ask me to talk about a stock or something I'm invested in, I'm probably going to talk about Uber. I think it's a misunderstood company from a business sense. I think they are well positioned for growth in the future, and their numbers back that up. I really can't ask for much more from a business that I want to invest in. One of the things I absolutely love about Uber's business is their growth as a platform and the services they provide. Everyone knows Uber for rides. They say, let's go catch an Uber. It's pretty much like calling a taxi for my generation. However, the delivery aspect of Uber has been outpacing this mobility growth. Uber Eats has been expanded into a ton of different types of products. They've been doing everything from your groceries, your food, your restaurants. You can get household essentials. They just had a deal to start delivering makeup. Pretty much anything you want, you can get on Uber Eats. Just in general, people are ordering delivery for these types of things, groceries, household essentials, things like that. They're ordering delivery of that more often, and Uber is well positioned to be the leading platform for those deliveries. Uber also has a subscription model that just crossed over 50 million members. Uber One, as they just said, just reached over 50 million members. Uber One subscriptions are great for a couple reasons. One, you get the subscription revenue, which is awesome. That just is straight money that Uber gets to pocket. Those subscription members are also going to be spending more on Uber because they have that subscription. I also think that this really just cements Uber as a leading platform. If you are a company, you want and probably need to be on Uber in order to reach the most amount of customers. I think the numbers really back that up. We had revenue growth 14% year over year to 13.2 billion, up from 11.5 billion last year. This is great top line growth from the company. We had non-GAAP operating income grow 42% to 1.9 billion. And Uber's been closing a ton of deals, making acquisitions, a $600 million deal for Spot Hero, which expands them into the parking business. They've been doubling down on some autonomous vehicle partnerships with companies like Rivian and Lucid, and they are really just positioning themselves well through their acquisitions and through what they're doing with this revenue and with this income to be successful in the future. One of the things I'm also really bullish on with Uber is their share buyback program currently. When it was announced initially, it was $20 billion. They still have over $16 billion in buybacks authorized. And I think this is a great time for those buybacks. I think the company is at a bargain price. They are sitting well financially, and they're positioned to be able to make these buybacks and return that directly to shareholders. I think Uber is going to continue to grow at a high rate. I think we're going to see double-digit top line and bottom line growth moving forward. And I think we're going to see that multiple start to expand once we have some of this fear about autonomous vehicles start to subside. I was buying Uber before these earnings, and I will only continue to do so. Finally today is a stock I'm considering adding as a new position, e.l.f. Beauty. Now, e.l.f. is a fascinating case of a quality business that I believe is currently oversold. This is a stock that's down about 15% year to date in 2026. It looks even worse when you expand it out a couple years. As you can see, some of these peaks, we're definitely down in a valley now. That said, I think e.l.f. as a brand is really intriguing. e.l.f. holds that role in the makeup industry as kind of being that cost-conscious but yet quality choice. For people who don't want to spend a markup for more expensive lotion or makeup, e.l.f. fills that role at a lower price while still providing a quality product. They have pretty massive market share because of this, and they provide high quality, essentially recession-proof products. Over 75% of their products are $10 or less an item. Taking a look at the fundamentals from last year, we can see net sales grew year over year at 28%. As they say, that reflects another year of industry-leading growth. One of the big things for e.l.f. recently was their acquisition of Rhode for about $1 billion. This is obviously a huge acquisition for a company like e.l.f., but Rhode is one of those companies and brands that really expands what e.l.f. can offer. Rhode's maybe a little bit more prestigious than typical e.l.f. branded products, and this kind of expands the market and what e.l.f. can reach and the amount of consumers and the type of consumers that e.l.f. products are being sold to. Analysts are projecting about 30% earnings growth next year. Despite that, e.l.f. trades at a 19 forward PE ratio. This is down significantly compared to historical trends. If we look at this historically, their PE ratio has been much higher, sitting at that 40, 50, 60, and above range. Now, growth rates are expected to be lower moving forward, but we're still looking at double-digit growth rate for the next 3 to 5 years. And yet the company sits at a 19 forward PE ratio. e.l.f. is a high-quality brand that is sitting at a value price. e.l.f. reports earnings on May 20th, and that is something that I will definitely be paying close attention to, and it's certainly a position I may add to my portfolio before then. So there you have it, 3 stocks that I am watching this week in May. I'll be adding to my MercadoLibre and Uber position, and I will be watching e.l.f. closely and likely adding that to my portfolio before their earnings. So I want to hear from you. What are you buying? Are any of these 3 stocks in your watch list? Are they in your portfolio? Or are you thinking about adding them in the near future? Let me know. Thanks.